Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another live stream. Happy Thursday to you. I hope you're doing well, and it is good to be back with you as we have got a lot to do. We've got to talk about the Nvidia earnings. We've got to talk about the metals, which seem to be on the move. Indices rebounding okay. And of course, we have some economic data. We've got a lot to do this morning, so I'm going to keep the intro brief. But if you could do me a quick favor just to kick things off, make sure to hit the thumbs up button on this stream. And if you're new, make sure to subscribe. A lot of people are not subscribed and they don't even realize they're not subscribed. But if you hit the thumbs up button and subscribe to the channel, YouTube will start promoting my content to you more often. You can stay up to date with what we're looking at here. If you're serious about your trading, I do hope that you get some utility out of my streams and videos to keep you informed on what's going on in markets. So if you're like, I want to stay up to date, make sure to hit the subscribe button and hit that thumbs up button. So let's get into it. First and foremost, yesterday the big event was Nvidia, and we did get a very interesting report. They beat earnings on the top and bottom line, better than expected earnings, better than expected revenues, and the stock dropped. Why? Well, actually, I need to pull up the stock box for this because it is really critical. I know we don't talk a lot about stocks on this channel, but Nvidia kind of takes precipice over most things because it is really important to the state of market psychology, right? If you're talking about Nvidia, which is the pinnacle, the flagship leader of the AI trade, which has been dominant in markets, if you are watching any of that, Nvidia matters to you. Even if you don't trade stocks or Nvidia, we need to talk a little bit about the earnings that came in last night. So if I go to my earnings report tracker, I don't know that it's going to have Nvidia's latest data. It might, but oh, it did. Look at that. Oh, heck yes. Oh, heck yes. Wait, that's awesome. Okay, our software is kind of beast mode, guys. Get the stock box. Holy crap. Okay, so stock box already pulled in the latest reported quarterly earnings here. The stock box, I know some people are like, wait, what's the stock box? I've never heard of this before, which kind of breaks my heart because the stock box is something I care a lot about. It's just like the EdgeFinder, but it's all around stocks. So if you're a stock and options type of person, get the stock box. It's really cool. And it's got a lot of cool stuff that's been built to it recently. Anyways, what I want to show you guys here is look at this. Why did Nvidia drop after putting up good numbers? Why? Well, if you watched my video yesterday, this is what I warned about. Now, I'm not going to try and take claim like, oh, I knew Nvidia was going to drop. No, I'm not that YouTuber. I don't know what, markets are going to do with any certainty tomorrow. All I can do is trade what I see happening today. Okay, so with that said, why did Nvidia drop on good numbers? Well, it's because there's a ton of hype. Everyone expects Nvidia to do really good. And so what we're looking at here on your screen right now is the earnings report tracker by the stock box. Essentially, it shows you the green bar. If you're familiar with the EdgeFinder, then this will make a lot of sense to you. The green bar is the earnings per share number that came out, their earnings reported numbers, right? The yellow line is the expectation of what the market thought we were going to get. Okay. And so what you can see here is that for the last 5 quarters here that we've tracked, yes, the Nvidia shares or earnings per share has beaten expectations. But this second graph down here helps to show the story. Nvidia has been beating estimates for a long time now. Everyone expects Nvidia to put up some rock star numbers and really to impress and dazzle investors. That's why the stock is up a bajillion percent. But yesterday we had data points that came, or the earnings came in with just a 4% beat overall. Now, again, for most stocks, you beat your earnings. All right, pretty good. Nice. For Nvidia, no. Everyone already knows it's a great company and makes a bajillion dollars a second. Everyone already knows that. To get the stock to move higher after it's had a massive run up, you got to really show some impressive numbers. You get a bigger beat, the market might actually get surprised. 4% beats, as crazy as it sounds, is not enough to impress the market. Roberto, my friend in the chat, says Stockbox is the best. Thank you so much. You have no idea, like when people are like, oh, I love this feature of this software, it like warms my soul because we work so hard to build this stuff. And so when people are actually like loving and using and bettering their trading and investing because they have our tools, it genuinely is a really cool experience and feeling. So thank you. I appreciate that. So yes, Stockbox, the earnings report tracker just shows you, do companies tend to beat their performance and by how much, right? So what we can see is that Nvidia beat, yes, but it was the low end of a beat in the last many years, actually. And that is why Nvidia did not have some sort of big pop to the upside. Now, to its credit, Nvidia didn't really gain or lose anything. The stock's up tremendously. If you've been holding Nvidia, you've done really, really well. Guys, if you had, now this is a big if, and I know that this stuff can drive people crazy, but just go with me for a second. If you had the insight to buy the stock at the very low point, you doubled your money in 140 days. You doubled your investment. That's crazy. So when you have a stock that doubles, do you think the expectations for that stock are high or low? Obviously very high. So I know not everybody trades stocks here, and I get that, but it matters to the indices. What do we take away from the Nvidia earnings that came in? Well, what it tells me is that you still have huge demand for semiconductors. We didn't have an earnings miss, right? If you had an earnings miss, the stock would be plummeting right now, and so would the rest of the market. We didn't get that. We got numbers that were slightly better than expected, but not enough to really dazzle the market and move things higher. So where does that leave us? With a so-so response. We beat, but just narrowly, or I'm sorry, we beat, but not by enough to really excite the market. If you had seen a 10% beat or 11% beat, 12% beat, stock would be popping and the market would probably rip. If you had seen a miss, the stock market would probably drop hard. So what we got was sort of a mixed, in terms of a bigger picture macro standpoint from Nvidia, we kind of got a mixed response. Samuel says, hi, Nick. I hope that someday you release a video on how to invest in stocks while using the Stockbox. Let me vent to you just for a second because I can't wait to make videos about Stockbox. Dedicated videos, don't worry, they're coming. So with the EdgeFinder is kind of reaching its maturity as a product. It still has more room and more tools that we want to build, don't get me wrong. But the core functionality of the EdgeFinder is at a point where it's like, okay, I can make videos because not much is going to change. But even with the EdgeFinder and with the Stockbox, when it's changing every week, it's really painful to make videos that are no longer relevant 1 or 2 weeks later. So the Stockbox, we're in growth mode. We're in build mode. With the Stockbox, we got a bunch of new features laid out. That thing is going to be a rock star. Again, if you trust the team here at A1 Trading, you saw what we built with the EdgeFinder. It's a very successful product with lots of people using it. We're going to do the same thing with Stockbox. Don't you even worry. But it takes time to build these things, and I will definitely, you have my word, as I am a content creator, I will definitely be creating plenty of videos about how to use the Stockbox. I just want to wait until a product is at a mature enough level. That's why we call it the early beta version, right? It's not in full finished mode yet. Stockbox is still early release mode because we are still finishing tools and features, before we really like lock in and make a whole course curriculum. Because again, if you make a course curriculum, if you make a bunch of videos on it and then it's obsolete because the product has changed, you see what I'm saying? That is the struggle of building a tool. We've offered it in early mode so that people can get their hands on it and start playing with it. But we understand the downside of getting early access at a low price is that you might have to wait a little bit before we can give you more clarity on all the tools and functionalities because they're still in development. I hope that makes sense. We trust you, Nick. You changed my life personally. Samuel, I appreciate that. You know, I had a lot of trading influencers that changed my life too. Not necessarily that they made me rich. They made me a bunch of money because their strategies were magical, but because their mindset was addictive and I adopted a lot of it, which helped me dramatically in my trading. Just looking at the markets with a different lens might be the biggest thing you can pick up from an influencer who's practical. And I try my best to stay practical with what I share. Okay, guys, we got a minute to go here before we get 2 data points. I believe we have unemployment claims this week, but we also have preliminary GDP numbers. Both of these are really important. I do have my silver long position. I know some people were commenting on it. Oh, look at silver, baby. There we go. Very nice. The silver trade is rock star today. Definitely glad I was patient enough to wait for that. I wanted to buy it earlier. Glad I didn't. The risk reward on my trade is looking pretty sweet right now. And I promise every single one of my trades looks exactly like that. And I never miss, and it's always easy. And trading is not hard. I'm kidding, of course. Trading is hard. I wish I had more entries that look like that, but that was a really solid entry. It came down to my level. EdgeFinder had a top setup on silver. It is the highest score right now. Picture perfect. I took the trade and we're looking good. Okay, guys, we've got 20 seconds to go here. I'm going to just switch over so we can watch all markets together here. And then we'll react to the numbers. Let's see what we get. All right, so we have unemployment claims dropping as well as preliminary GDP. Both matter quite a bit to the market. Let's see what we get. Preliminary GDP came in at 3.3%. That is better than expected there. Nice strong beat there. And unemployment claims came pretty much in line at 229,000, though technically that is slightly lower than expected. So good economic reads here this morning. That is good for, we would imagine, the dollar. Did that push silver and gold down a little bit? I would imagine. Dollar's up just a little bit. Not a huge move. Russell is slightly lower off the idea that if the economy is okay and jobs look okay, the Fed may feel less pressed to cut interest rates. Remember that Russell is really sensitive to interest rates. So is the dollar. So dollar up, Russell down, gold little soft off of that. S&P 500 mixed, makes sense. GDP is always a little tricky with stocks. You want strong growth, but if you get too much strong growth, they won't cut rates. And then the stock market's like, hey, we want rate cuts. And they start crying. And okay, so there's the silver trade. Little bit of a muted pullback here in response to that. NASDAQ is looking okay here. Here's your 15-minute chart. An hour to go until the New York session opens up. S&P 500, little mixed here. Russell 2000, a little muted. Let's take a look at the VIX. VIX is lower, of course, following that Nvidia earnings. Not a big move on Nvidia earnings, so VIX is chilling out a little bit here. You also are getting the sell-off in the news as that volatility kind of gets sucked out of the market. Gold actually making a slight move lower here on the 15-minute chart. Same thing with silver, pulling back just a little bit here. Oil prices muted. Bitcoin trying to stage a comeback. It looks like you've had a pretty sizable pullback on Bitcoin here recently. Topped out around 120 something thousand, dropped all the way back down in just a few days to 109. Just shows you the volatility that is in Bitcoin. Absolutely crazy. Bitcoin came down to this level of support, really clean turnaround at that 110 level. Interesting stuff there. But yes, I want to loop back here and talk a little bit about the silver trade. Why am I in the silver trade? How am I managing it? So I took this trade yesterday, which again, the entry here ended up being pretty picture perfect. We came down to this level of support. Price came down, wicked into this area, bounced off, came back one more time, and I bought right there. And we turned around. We are back to the highs. I'm very curious to see how we react here. I have my stop loss. I do not have a take profit on this trade. So if you're new to the channel, the way I manage trades is I trail stops. So, or at least my momentum trading style. I have a couple different strategies that I use for options. I trade Forex and I trade, commodities and indices as well. And for commodities and indices, what I typically will do with a trade is I will have a stop loss and I will usually trail it if we get some sort of move. Now, what I'm looking for personally on silver here is to see if we can actually break and stay above this area. At that point, and I think, again, I could be wrong, but so far I'm right. We'll see if I still am right. I think that the silver market, the gold market, metals in general have more room to expand higher. And so if I think that the silver market is going to move higher, I don't want to tighten my stop here. I don't want to put my stop right here. I'm not fearful at whatsoever of what could happen in this trade. Some might say, well, Nick, what if this thing drops all the way down and tags you out for a loss? Then so be it. I've been trading for almost 10 years. I can take some heartache. Don't you even worry about it. It happens sometimes, actually. And it could happen on this trade. You could get a sharp reversal and all the profits that I've made could go away. They're all unrealized profits. Why? Why would I not just lock something in? Well, because there's always a price to pay in trading. If I trail this stop and I put it right here, what if it just does this? Boop, boop. Right? Did it really show me signs that the market was reversing hardcore just because it pulled back a little bit? No, markets don't move in one direction. They move in waves. They have pullbacks. They have breakouts. I think the general path of silver is higher. I don't want to get in the way of general path. What does general path mean? General path means I think it's going to move higher, but I don't know exactly every single candle what it's going to print. I just think, not based on my emotions, but based on my system. Silver, which was a trade setup that popped in the EdgeFinder yesterday, should continue higher. I think that the direction is higher. I agree with this consensus from the EdgeFinder, showing me that sentiment, technical, and economic data generally agree that the path of least resistance is potentially a weaker dollar and stronger gold and silver. So if that is my bias, does that mean that it's going to move every single candle in my direction? It's going to be a clean slate and then it's going to be easy? No, trading is hard. Trading is hard because, again, the markets they can chop around. There's a lot of difficulty in predicting what's going to happen, especially the lower time frame you get, the harder it is to predict in my experience and opinion. So here's the thing. When it comes to silver, I have the trade on. My stop is below. What I'm looking for is a break above. If it breaks above, then I will lock in my stop, probably right around here where we had this kind of nice intraday turnaround in the Asian session, right? That'd probably be a good spot where I would trail that stop. I would just like to give this thing room because it might come down and retest that area before it does that. Or again, I could have a heartbreak trade where we have that situation, and it has happened and it will happen again to me. It is part of trading. Trading is not about this trade or the next trade or the trade after that. It's about the next 10,000 trades you're going to place. Do you have an edge and do you manage risk within that? I've been on a really sharp rant here recently about why trading psychology is a big old waste of time. And it's a very controversial opinion, I'm coming to find out. But let me tell you why it's a waste of time. It's not a waste of time as in discipline isn't important. It is important. Don't get me wrong. I have to have discipline to not, but like that's so easy compared to actually mechanically testing what is the proper thing for me to do and what is the system that I should follow to find good entries, to find good exits, manage trades. The mechanical aspects, the rule set, that's harder than me saying I have to have the discipline to not do anything with my stop loss or to not take profits. Like look at your two hands in your real person. Like, are you a junkie or are you a capable person, right? If you're going to trade the financial markets, you can't treat it like a casino roulette table. You can't treat it like a you're going for the jackpot and this is a total casino run for you, right? Like, it's going to happen. I'm going to have this trade. If I keep taking this exact same setup, EdgeFinder top setup looks good, pull back to a support level, put my stop in. Market's going to do this sometimes. It's going to run in my favor, and then it's going to completely fall apart. Some tweet is going to happen. Some news event's going to happen. It's going to take me out of the trade. I'm going to take a loss, right? What's foolish is to assign the reason that trading is hard is because, I just need to avoid paying attention to my emotions. Actually, I say the opposite. You should acknowledge what your emotions are when you're trading. If that means you need to go step away from the charts or whatever, then do that. That's important. But the bigger problem that most people face is they put on too much size, and that's why they're panicking, right? Their trades are way too big. So that's why they are a wreck and they can't sleep at night. That is your problem, is your position size is too big, first and foremost. That's not trading psychology. That's risk management. Again, too big of a size will cause any person to freak out. So if you're like, oh man, I'm freaking out and it's my trading psychology. No, you're a gambler and your trade size is too big. It's that easy. Again, it's not, I don't know how else to say that other than people will use trading psychology as an excuse for degenerate gambling. So don't be that person. Risk small and start treating this like a business. You don't see businesses going all in on a 50-50 bet, right? Which any single trade is about a 50-50 bet, right? Over the long term, if you're good, you might be able to get a better risk to reward. You might be able to, make more than you lose. But on a single trade, any single trade, I don't know if it's going to be a winner or a loser, right? Again, the trading industry is obsessed with trading psychology because it's easy to fool people and trick people and sell people into thinking they just need good psychology. You know, it's really hard building mechanical rule sets and strategies that make more money than they lose. That's hard. And that's all there is to actually profitably trading. Like, cut away all the noise, cut away all the stuff. Profitable trading is risking small with a good edge. That's it. If you can stick to that, you make money. If you can't, then you'll call it trading psychology for scapegoating your gambling problem. Okay. So don't be that person. I am speaking as truthfully as I can about the trading industry. People call it trading psychology to excuse the fact that they're just gambling with way too big of a size. I challenge you, if you disagree with me, first of all, respectfully, I don't really care if you disagree with me and you're trying to change my mind. I don't, I've been doing this a long time. I know it works for me. I know, I've made it to profitability in my trading. So I'm just sharing with the world my experience and my learned lessons that have been painfully paid for over time. But I can tell you, trading psychology was not what was holding me back. It was risk smaller and find an edge. That's it. Most people will obsess and spend countless hours listening to trading podcasts, listening to influencers talking about how important trading psychology is. Look, it is important, but that's like step one. Important in terms of like level 10. You want to become, let's say you have to get to level 10 to be a profitable trader. Trading psychology is like level 1. Level 2 through 10 is good risk management, thoroughly knowing how to manage risk, and actually deriving a system, building a strategic rule set that actually makes money. That is way harder. So again, level 1 is like, I need to stop gambling. That's like, if you can't get past that, you're never going to make it to profitable trading. Like if you keep trying to flip accounts, Samuel's got it right. Okay. Samuel in the chat, people want to flip accounts without thinking they can also flip it to zero. The reality is most people who are trying to flip accounts are just multiplying by zero over and over and over. They have a little profit, like, I just got to keep doing this. And then they all the way back to zero. Why? Because their position size is huge and they probably don't actually have an edge. That's it. So again, I know I'm obnoxious with this topic, but when I'm repeating a topic over and over and over, it's because I feel very strongly about it. And I see a lot of people making the mistake of thinking that it's all trading psychology. That is such a disaster path to go down. No, you need to back test. Like, Get your head out of the sand and spend time testing systems. Go watch videos on how to backtest. If you don't want to pay for software, I mean, you should. It's worth every penny. Forex Testers, sponsor of my channel. Highly recommend you check them out. Actually, if you're somebody who's resonating with this, I don't have the link or anything on file, but one of our support reps could get it for you. If you want to check out Forex Tester, it is 110% the product that I recommend and use and love for testing systems and strategies. If you're like, fine, Nick, I'm giving in, I'm done gambling, I'm done being an idiot and losing money and calling it trading psychology. If you actually want to start testing systems and use the scientific method on this stuff, the best way to do it is with a backtesting software. There are free ways, but the best way to do it is with backtesting software. We have a discount code. I don't have it on file, but I've got an assistant on file here. Our support team can help you out with getting that link and promo code if you want to check them out. It is sponsored, but like, I'm not even kidding. Like, change your life. Start backtesting. Like, it changed my life. I genuinely stand by that. Send us a direct message if you're interested in getting backtesting software. Forex Tester is the one I recommend. We have a promo code. If you send a direct message, that Emily from our team can set you that up with that. So if you need that link and that promo code to get started with that, I'm telling you, it changed my life. And it's really important that you actually are testing systems. And it's like banging my head against the wall, because I do these streams and I say that, and there's like countless people who, when I speak to them, I'm like, have you ever spent some time backtesting? 90% of the time, no, never backtested before. What are we doing? So you're just getting into the live markets and you're not actually testing anything. You have no idea if what you are doing actually makes money or not. Like, you're just taking trades because it sounds good. How is that any different than walking into a casino and betting on red, right? If you don't have a system that you've tested, what are we doing? So again, if you are interested in getting a backtesting software, 110%, you should invest a little bit of money in that. It's worth every penny. It'll save you so much money. Send us a direct message, and our support team will get you hooked up with our sponsors discount code. Okay, sorry for the rant. I think it's an important one, but let's get back to some charts here. Nasdaq's up 0.44%, pretty incredible. You've had the recovery move here. Nvidia is back to break even since its earnings report. Again, earnings. They beat the analyst expectations and kind of missed the hype expectations. That's the best way to know how to explain it. SP500 up here on the day, about 0.25%. Silver's looking great. We're up 1.114% here. Look at this. Loving this. I'm loving the relative performance between gold and silver today. And again, this is obviously, with hindsight in my favor, why I chose silver. Silver seems to be moving. Gold seems to be dead in the water. I love trading gold. I'm not talking any smack against trading gold. It's one of my favorite things to trade in the planet. But right now, silver's where it's at. It's moving nicely, and I like trading things that have some movement. Gold, choppy, choppy, choppy. We're back to resistance here at gold. Let's see what happens here. You've got resistance overhead. And again, if recency kind of sticks to it, if we continue to see this choppy nature, right, we could still see gold back and forth. I mean, if gold moves lower, likely silver moves lower too, but silver seems to be kind of cleanly outperforming to the upside. We can see this in the gold to silver ratio. Take a look at the gold silver ratio, still trending lower, showing silver outperformance, right? Gold down relative to silver, or gold might be going up, but silver's going up more, right? So that relative performance is really key, and why I chose to trade silver, because again, look, Nick, you're getting a silver and a gold very bullish position. Why did you choose silver? Well, number one, silver is getting a 1 point higher score, but more importantly, I just like the technicals. The trend here looks really good to the upside, and momentum seems to be holding up. Will you make a video on the stock channel today, Roberto? Yes, typically. So this is my channel plan for the second YouTube channel I do. That's Trader Nick Stocks. My plan is to do Tuesdays, Thursdays, and Sundays. I think I'm going to upload videos definitely Tuesdays and Thursdays, possibly Sundays. I do a lot of videos each week, so I'm trying to do enough for everything, but also not, overwhelm myself either. Yields here. We had a long discussion yesterday about bonds. I thought that was a really important discussion. Yields are moving lower here today, so that is actually interesting. Let's go back and just recap. So for those who are just tuning in, we did get preliminary GDP numbers, which did actually beat expectations. This is strong for the dollar. Jobless or weekly jobless claims or unemployment claims came in just slightly better than expected. So I would argue that today's data points were just a tad slightly stronger for the US dollar. So if we take a look at the US dollar here, take a look at the 15-minute chart, you can see price action not really agreeing with me. It initially popped, dropped back down. So not enough to really turn the course here for the dollar. Dollar index overall still looks really rough to me. And most of our indicators here still suggesting weakness for the US dollar. If I pull this up, though, I think after today, it's going to probably go 50-50. So we'll get a little bit of, because this jobless claims number, once this updates, that will go blue, right? Slightly better than expected here this morning. So that will go bullish for US dollar, bullish for stocks. So that will shift a little bit once this updates. The data points update on an hourly timer for the most part. So this will update soon. And then that will change the calculus just a little bit here for our USD score. So that's going to go slightly more positive. GDP growth was already positive from the previous. So this is going to remain unchanged in terms of its impact on final score. So we are seeing a flip in jobless claims from last week's data, but we're seeing an unchanged impact on GDP. So GDP numbers, this will not change. So we're probably going to be looking at about a 50-50 USD scoring. So we've got some stuff that looks okay, some stuff that looks weak, little mixed reporting. Stocks, however, still remain unattractive to me. And so, we take a look at the indices. When I say unattractive, as I've said 7,000 times, I'm not looking to short the stock market. I have a lot of stocks that I still own. I've been slowly selling out of some of the stocks that I own, but I'm not short the market. And I own Nvidia. So, Nvidia dropped a little bit yesterday. I had a short call position that I'm probably going to close out for profits when the stock market opens up here today. But yes, S&P 500 back to those highs. Would not be surprised if we did get a little bit of a squeeze through the highs. Although, again, that Nvidia earnings good, but not excellent. And this market it demands perfection right now. Stocks are priced very expensive. When stocks are expensive, you need perfection. Silver position skyrocketing. It's doing well. We're doing okay with silver. Take a look at the P&L on this one. We are sitting on $4,200 on silver longs. I've trimmed my stop loss, so I reduced the risk slightly on my trade. My plan with silver is I'm looking for a break through these highs. I'm trading SLV personally because in the US, we can't trade XAG USD for my international friends. That is what is called a CFD, and CFDs are unfortunately untradable in the US. It's illegal to trade CFDs. Not that they're necessarily bad per se, but because they inherently hold leverage, which is a very sticky subject when it comes to US regulations. So I'm trading SLV. You can also trade silver futures if you're in the US. Those are kind of your main two options, to be honest. The third option that I don't recommend is trading with a sketchy broker that will let you trade XAG USD. Some traders will do that. I'm not a big fan of doing that. I trade, on the stock exchange SLV because very liquid and something that I just prefer to trade this one. So I'm trading SLV. I have a long position. We're looking good here. Price gapped up here because when you're trading the stock market, the downside is that you do have overnight sessions that close. So, but I don't trade, middle of the night anyway. So it's mostly fine. But we're back to the highs on SLV. I'm sitting on, like I said, about a $4,200 profit. And we will see what happens here. Nick, your options video is the best options video I've ever seen. Oh, Samuel, you got to stop with the compliments, man. You're being too nice to me. You can't hype me up like this. I appreciate it, though. Options are something that I absolutely love options, but I find them difficult to explain. I don't think I'm the only one. They're just complex vehicles anyways. But explaining them is something that I'm still learning as a content creator, how to best convey my understanding of options to beginners. It's not easy. Nick, how do feds or central banks deal with stagflation while maintaining their dual mandate? That's a great question. So how does the Fed handle stagflation? Well, according to Powell, who addressed this in his Jackson Hole Symposium speech, he called it a challenging circumstance or a challenging situation. What do you do if, right? What do you do if you have rising inflation and problematic jobs data? He basically said you watch both sides of the mandate and you respond more aggressively to whichever one is the bigger problem. The Fed seems to be responding to it with, they think that they're restrictive enough to cut interest rates a little bit to help with the jobs data side. But again, it's a tough situation. Stagflation is very difficult for central banks. Like if you have high inflation but good jobs, they know what to do, right? You hike rates. If you have low jobs and low inflation, the Fed knows what to do. You just cut rates. But what happens if you get high inflation and problematic jobs? It's harder because there's not an easy answer. So the Fed kind of has to sit and watch and react to whatever is more problematic. That's why, to me, again, I am cautious on the stock market, is because I feel that stagflation is a bigger risk than the market is kind of thinking. The market is sort of pricing it like we're going to get rate cuts. It's going to be great. Everything's going to work out. And I'm not making a prediction that, the economy is going to go into a horrible recession, but I am making the claim that the risk to reward on stocks going higher doesn't look very attractive to me. Like, I think that you could have some real downside risk if inflation continues to rise and if we see some labor data, right? If I can say words correctly, if we have the labor market start to cool off further, that dynamic poses a risk to stocks. They've been on a monumental run, and I like them. If they dropped 5-10%, I'd probably pick some stuff up. But at the highs, just not really interesting to me. And instead, I've been trading other things. So I showed you guys I'm long silver. This is a trade that I'm in that I liked a lot better, right? That's the cool thing about trading a wide range of markets and being a fundamentalist, is you're not tied to, I need to trade NASDAQ every day, or I don't need to trade gold every day. Like, I can trade a wide range of things. So I have on my current roster, I am long euro and I'm long silver. I think the dollar has downside. I think stagflation is a risk that I think the Fed will start to respond more so to the labor data cooling. And if that is the case, I think they're going to cut rates a couple times. And if that happens, the dollar weakens, and theoretically, we never know for certain, but the risk to reward on silver and gold look attractive to me. That's why I took the trade. I don't know what's going to happen. I evaluate risk to reward. As a trader, my goal is not to predict every little thing that's going to happen in the economy and in the markets. My goal is to look at the data. If I'm doing it at a professional level, I want to have all of it in front of me, which is what the EdgeFinder does. And then I want to identify risk to reward opportunities, which the top setups algorithm is built to help me find. The EdgeFinder's top setups page, which, by the way, quick little plug, it's a free plug, so check this out. We did something. Let me show you. I want to show you guys something. I want to show you something, and you're gonna like it. You're gonna like it. I promise you'll like it. Give me a second. I'm gonna show you something. So this is the premium version, right? Bear with me, okay? I'm gonna show you something cool. I'm going to show you something cool. I've got a surprise for everyone. Okay, and good. Where's my streaming software? Okay, everybody can see this. Okay, good. So what you're looking at is the free version of the EdgeFinder. Wait, Nick, the free version of the EdgeFinder? There's a free version? Yep. Wait, Nick, the free version has the top setups page on it? What? Nick, are you crazy? No, I'm not crazy. It's only temporary for a couple days, but you should check it out for free. And here's how. Top setups is free. Just trust me, I can't do that long term. Otherwise, people wouldn't buy the EdgeFinder. It's the whole use of the tool, and it's what funds development of a product like this. But for a limited time and a little bit of a sneak preview, we're going to be doing discounts next week. And so I want you guys, if you've been thinking about it, try it out. You want to try it out for free? Here you go. The top setups page is free until the end of the week. I encourage you. I request that you do this. Top setups page is temporarily unlocked. If you want to access it, here is the link. You have to just fill out that form, and it will send you access and grant you access to the EdgeFinder free version. And it is temporarily top setups is unlocked. Again, it won't be forever. Otherwise, nobody would ever buy our products. It's the top feature that people love. And it is what ultimately funds. Look, this is capitalism, right? You buy our products, we build better products so that you buy more products, and then we build better products. It funds itself. If there was no purchases of the products wouldn't get any better, and they would have never actually come into existence. Check it out. It's free for the end of the week. You can explore it. You can see a little bit of the logic behind how the EdgeFinder finds ideas. You can access this page from a mobile device or from desktop. You also, even past this week, by the way, guys, I have also made the decision to make more features within the EdgeFinder free version more accessible. Now, the full version will always be infinitely better than the free version. That's just, again, it's capitalism 101. But we've added some features to the free version to make this a useful tool that you can use even if you don't have the money right now to purchase the full EdgeFinder. It's a slight change in our business model. We want to actually help people as much as we possibly can, not because we're saints, but because we think if we help you and build you tools that really improve your trading, you'll see the value in spending money with us and buying the full thing. That's our business model. That's the whole YouTube channel's model too. I help people. I don't paywall anything that I know about the markets. I share everything that I know, everything that I've learned, all of my trading strategies for free. I don't sell a course. The model is share value with people. And in response, guess what? People buy stuff from you. People subscribe to the channel. They become loyal to what we do. That is the business model. The business model is help people first, sell to them second. Aaron says, best purchase ever. I still feel guilty. I bought it with a discount. Yeah, I mean, good for you. We do discounts. We've got one coming next week. Full transparency. We got a good sale coming next week. So if you want the EdgeFinder, lock in, pay attention, try it out for the week, and then buy it next Monday. Nick, I'm from the Philippines. I want the EdgeFinder. It's just too expensive, and I want to purchase it for the lifetime. Here in Philippines, we barely earn minimum wage to even fund a trading account. So we do also, more transparency for you, we offer some extra discounts for people in places where the dollar is very expensive. If that is you, the best way, always the best way to get the best discounts, to get payment plans if you need them, to get inclusive discounts for people in places where the dollar is expensive, the best way, hands down, to get that information is to send us a direct message in the bottom right hand of the screen when you're on our website, a1trading.com, or we'll drop a link here in the chat. There it is. Boom. Got the producers are on the button today. Send us a direct message right there and let us know your situation. And our support staff is trained to help people that need extra help to make payment plans or to split the cost up, get access. We understand the EdgeFinder is expensive, especially for people. It's not a cheap tool. It's a remarkable tool, and remarkable stuff is not cheap. It's an expensive tool, but it's an investment. And for traders who are really serious, this is the tool to get. So I know I've got sales pitch left, right, and center, but genuinely check out the EdgeFinder. The top setups page is free until the end of the week, and there is your shot to explore the tool for free. And one last time, if you don't mind, James, if we could drop the link to explore the free demo version, you just fill out this form and it sends it directly to you. Love the EdgeFinder, but it's too expensive. Yeah, just send us a direct message on the website. We can maybe help you out to find something there. There's the free access now. Guys, up next, we've got Marco taking over the stream for a little bit. Stay tuned as he will be going through some setups, analysis, and things that he's watching in markets just after this quick break. Stay tuned for Marco. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello everyone, welcome to my segment of the stream. So let me just get my charts up, just a second. Let's see, present, share. Okay, so, okay, we're up. Let me also minimize some windows. I hope everyone is doing well. My favorite for today is gonna be silver. It's looking the best right now. And if you have any questions, any chart requests, if you were here yesterday and you had a question which I didn't cover, put it in the chat. Hello, Roberto. What's up? FX Bashi. And okay, so you guys want to see silver? Yeah, silver is definitely moving. Any questions? If I didn't cover something from yesterday, make sure to put it in the chat and I will take a look. So let's get started. Stock market pushing higher, S&P all-time highs, grinding higher. NASDAQ not at the all-time highs, but pretty much very close to the all-time highs. So my overall bias is a bullish one. I would expect this uptrend to continue to the upside. So the stock market is looking very, very healthy right here. What about the dollar? Dollar is actually losing a bit of value in the last few days. It has been going a bit bearish, but nothing significant. We didn't have any massive sell-offs like we got with these two, or let's say these bearish candles. I would say that I'm a bit neutral / bearish long-term. So currently I'm a bit neutral and I'm waiting for more data releases. So I'm waiting for NFP, CPI, and PPI, and then I will have more clarity about the rate cuts. So that is what is on the radar. I don't have a clear reading on the dollar right now, but once we get more data released, I should get a nice reading. So as far as my positions go, euro dollar is an interesting one because I did get stopped out for a loss on my personal IC markets, but on my prop firm accounts and on my Darwin X account, I'm actually still in this trade. So it has gone all the way from touching the stop loss Depending on your broker, maybe you're still in, maybe you got taken out. And now it's all the way back to almost break even. So this is a pretty weird position. Right now it's just being flat, just being range bound. They had a question in the A1 Discord. So what's the game plan? Am I holding this trade? Am I closing this trade on my prop firm accounts? The game plan is to just trail this position if it does go to the upside. So I got taken out on the personal. That's okay. Still in on some other accounts, and I'm going to trail my position to the upside if it does decide to continue up. I also may take some of the position off at this high. So if the current scenario gets a bit stale, which right now it kind of did, I'm not sure what is going to happen with the dollar. So maybe I will also take some of the profits off if we do hit this level. I'm still thinking about it, still looking at all the factors, still looking at all the confluences. And if we do get up here, hopefully we do, I may take some profits. So that is the euro dollar position. Then we have the euro GBP, which is in drawdown but has kind of recovered. It's the same thing as euro dollar, just ranging around. And as far as I can see, we got some breaking news. We got some ECB minutes, which could signal possible rising inflation, which is of course hawkish, which is of course bullish for the euro. So that may be pushing the euro to the upside for today. And the game plan for the euro GBP trade is to just keep holding this position, keep trailing my stop loss. Okay, so that's the game plan for euro GBP. So I also like silver. I know Nick isn't in a silver trade, and for me, I'm actively looking to take a buy setup. Let me list all of the reasons. First, gold is looking a bit flat and stagnant. It's still just ranging around, while silver is, in my opinion, outperforming gold. Silver looks more healthy. Silver looks better. Silver looks very bullish. So investors may not be so confident in buying gold at 3,400, while they may be happier to buy silver because they may think silver did not have a huge explosion yet to the upside as gold did. Also, the Chinese buying of gold has kind of stopped. So during this huge uptrend, China was a massive buyer. So silver may become more attractive for investors. Now, just the price action is better. It looks pretty bullish. If we look at the EdgeFinder, you're going to see a very bullish reading for silver. So let's take a look. If we remove the neutral one, silver very bullish, right? So commitment of traders, institutions are long, retail seems to be short, seasonality is good, trend is good, and all of the fundamental data is looking pretty attractive. Also, I wanted to mention one more confluence, but I don't remember now what I wanted to say. If I do remember it throughout the stream, I will mention it. What am I looking for? Well, I'm looking for possibly just a bit more bullish momentum, possibly for the markets to go to the upside and close above this level. My worry is that we had this push on Friday, Jackson Hole, Powell speech, massive explosion in silver, and then we retraced the whole move. So the whole move was retraced. Now, usually when you get these one-off candles, when you get these events that are not really based on data, but are based on noise or the tone of the Fed, you kind of can get these ranges after the move. So you can get this. And I don't really want to get stuck in such a range. So if we do manage to push up and close above on the 1 hour chart, I will start considering entries. So that's the game plan for now. Maybe it changes. Maybe I decide to take a trade somewhere inside of this range. But I'm just worried. You can see now we pierced the high, left the wick, retraced. I'm just worried that this range does not become a prolonged type of range. Okay. So targets, which targets do I have in mind? I'm going to be, of course, if I do get in, I'm going to be trailing my position. The plan is to trail my stop loss, but some targets, I would say 41. 41 is a pretty good target. It would also be some decent reward to risk. So let's say I got in here, stop loss below the swing low, maybe a 1.5 to 1, something like that for an initial trade plan, for an initial position plan, let's say. And if I trail it, I may be able to squeeze out even more. So silver, absolute favorite for today. I think Nick got in a bit lower, so he is now doing pretty well with his position. I think Nick bought somewhere in these levels, so that's pretty good. For me personally, I just want to wait for a breakout out of this high, kind of a let's say confirmed breakout, because I'm worried this candle was a one-off thing because it was not based on a lot of data. So let me check the comments. Let's see. Could you analyze the DAX? Sure. GDP yen. After the stream, I'm going to chat with the support team in regards to the A1 EdgeFinder price in Philippines. Yeah, absolutely do that. If you reach out to the A1 team, and if you are located somewhere outside of the United States, you can talk it out and maybe get a special offer for yourself. So definitely do reach out to the A1 team about that. Silver we just did. Okay. Are you planning to buy silver? Yes, we just covered that. Hey Mario. Hey Kelvin. Okay. Hey Kelvin. CAD yen. Okay. CAD Swiss. Hey Mario. Hey Marco. Hey, what's up, Kelvin? CAD Swiss. Marco, what's up? What's up, Samuel? Hey Mario. Okay, this is just no spam. Bullish on Bitcoin. Okay, you guys want to see Bitcoin. US30. Which prop firm do you use, Marco? I still want to see if FX2 is serious, have a huge payout pending. I haven't done much research on FX2 funding. I personally use FTMO, but A1 Trading is connected to DNA Funded. So DNA Funded is a reputable prop firm. My recommendations would be DNA Funded, FTMO, the 5%ers. FX2 funding, I haven't done a lot of research, so I don't have an opinion. I cannot tell you anything about that. I got stopped out of euro dollar. I'm dumping currencies forever. Okay, so don't quit, but maybe you need to review the position, see what happened, and see how you can improve. Or it's just part of the probabilities. Like I got taken out on my personal IC Markets account, part of the game, part of probabilities. Hey Marco, can I have your opinion on Aussie yen? I've got to sell. Okay, Aussie yen. So I'm collecting requests right now. Nick was linked to FX2 funding a while ago. Okay, cool. So I think Nick then has done some research about the company, but I personally don't know anything about them. I also got stopped out of euro dollar. Maybe you guys are talking about this position, the one that I basically talked about in the A1 Discord. So I don't know why, but there was a bit of a data discrepancy. As I mentioned, IC Markets had a big wick to the downside on this candle, while FTMO, DarwinX, Alpha Capital, they didn't have this wick. And also on Oanda data, I would still be in. So here on Oanda data, it did not touch the stop loss. So sometimes it happens, different brokers, different data feeds, or maybe they are out to get us. They're not out to get us. It's just part of the game. So I think I got some requests by now, and let's start. So let me just repeat myself for gold. So silver looks great. I'm definitely looking for entries, definitely looking for buy setups on silver, but gold, as I mentioned, is super flat, super stuck in a range. Okay, going nowhere right now. I'm being patient. If you're a trend trader, in my opinion, you don't have anything to do inside of this price action. If you want to lose your money, if you want to get chopped around, if you want to take 10 consecutive losses, then this price action is perfect for you. If you're a range-bound trader or you're doing options, then this may be a good environment. If you're collecting income, if you're selling premium, or let's say receiving premium, this may be a good market. For me personally, I'm of course waiting for a breakout of the highs, or possibly gonna get in on an initial buy position at the lows. But the best thing that could happen is if we do break out of the highs. As I mentioned, the China buying that was a big narrative why gold exploded to the upside has ceased. So China no longer is buying gold. Gold seems a bit expensive. So 3,400, that's a pretty expensive level. And I think investors are looking at gold and saying, damn, this thing has already run up quite a lot. Gold already had a massive explosion. Let me try to find something cheaper. So let me see silver. Let me try to get into silver. Let me try to get into platinum. You know, platinum had an explosion up, but it has been very, very corrective in the past, well, almost past decade. But yeah, in the past 10 years, it's just been super corrective. So maybe platinum is a bit better to invest into. Gold, I don't think it's such a good play right now. And of course, there needs to be demand. Okay, demand is not infinite. Demand ceases at one point. Right now, some people may say this is an accumulation phase. So I know Chris Pulver says this is an accumulation phase, and I would very much like that it is. It could be. I think that would be a great story, but I need to see confirmation first. I need to see a breakout. That's my story for gold. Bitcoin is up today. So Bitcoin is bullish today, but quite a lot of selling pressure here. So massive red candle here, massive red candles, consecutive red candles. So although we are bullish for the day, I would actually be a bit bearish on Bitcoin, neutral/bearish. I don't think it's looking the healthiest. Ethereum, though, looks much more healthy. So Ethereum does look better, in my opinion. We're getting nice sort of a trend line right here. The trend line is definitely getting respected. See, definitely getting respected. And I just see the massive momentum. So if you want to try trading Ethereum, you can. I just don't know anything about fundamentals for Ethereum. I don't think Ethereum works on fundamentals. I think you need to have some sort of inside information or some sort of an idea of what is going on with the massive buying. But if you're a trader that's using purely technical analysis, this chart is still good, I would say. This chart still looks pretty healthy to go to the upside. Bitcoin, as I mentioned, not so much. So maybe the overall story is that the leader is now kind of slowing down while the follower is doing pretty well. What do I mean? Well, I mean Bitcoin looks pretty flat right now. Ethereum exploding higher. Gold looks a bit range bound. Silver looking very good, looking very bullish. So possibly right now it is time for the catch-up trade for the follower to have an explosion, whereas the leader, in this case gold, to be a bit flat, to be a bit range bound, to be a bit stagnant. That's my take on the metals. That's my take on the crypto market. Let me go back to the comment section. Let me see. Let me see what you guys have. I think you had the DAX. We had the DAX. We had CAD yen. Okay. GP JPY. Yeah, sure. So let's do it. DAX. Well, for the DAX, I mean, it's a pretty similar story to gold. I'm looking at this price action and I'm seeing a very flat range. I'm seeing very corrective price action. I'm seeing something that you would be better off maybe selling calls and collecting income, collecting a premium, you know, in this market. So buying the low, selling the high, trading the range. So as far as trend trading goes, I don't have a big idea on where this price wants to go. I mean, overall, yes, I'm definitely bullish. You want to be bullish on the indices. You want to have an overall bullish bias when you're looking at these charts, because just look at this, massively exploding to the upside. So you don't want to go short. But also short term, do you want to take a short term trade? I don't think so. I think it looks super flat, and I think there's better opportunities out there. if you want to go to the stock market, if you want to look at some indices. There is the NASDAQ, which if we get a pullback, I think it would be great to buy. S&P, well, same thing, looks very attractive, looks to be exploding to the upside. So if we get a pullback, maybe good to get in. US 30, whoa, looking pretty nice, looking pretty healthy. I think I actually did see US 30 in the comment section. So for the US 30, broke out of all-time highs, broke out of this this sort of inverse head and shoulders. We have the left shoulder, we have the head, we have the right shoulder, and now breaking to the upside. So that's actually a bullish pattern, if you guys don't know. And I think this is pretty good to maybe look for buy setups. Maybe it's even better than NASDAQ and the S&P. I'm just a bit careful on the indices right now. I think they are a bit overextended. So that's why I'm anticipating a pullback. That should be translated into the US 30. I mean, if the NASDAQ pulls back, if the S&P pulls back, US 30 should pull back as well. I did talk about Nvidia. Yesterday, we had Nvidia earnings, so let's check the reaction. I did some research, and well, it was a beat on earnings, so the earnings came out better than expected. The problem was the beat was not as big as it was in the past. So a lot of investors were expecting Nvidia to massively beat earnings. So a beat of earnings did happen, but it was not as high as expected. That is why you actually got not such a huge reaction. You got some sell-off on the 19th of August and yesterday. So it was kind of a bullish reaction, yes, but okay, so this chart is a bit confusing to me. This is the stock market chart. This is the pre-market. Okay, so that's why it's a bit different than our other charts. The reaction wasn't a huge push to the upside. It's because the earnings did not beat the market in a huge way. Okay, so that's the Nvidia story. Nothing that significant, to be honest. Nothing that produces a lot of volatility. Russell is pretty interesting because it is not yet at the all-time highs, so pretty close, but not there yet. If you were looking for buy setups, I think it would have been pretty smart. Also, rate cuts could be a very bullish story for the Russell. So companies can then take out cheaper loans. They can take on a lot more debt. They can increase their stock market price, even if they're not a really good company. So what you can see is even some companies that are not profitable, they can take out a lot of loans, a lot of debt, and thus kind of artificially inflate their stock market price. So that can happen. That's for the Russell. My favorite is still the NASDAQ. I mean, I've looked at all the indices, but my favorite is still going to be the NASDAQ. I still love the artificial intelligence story, and I'm still just waiting for pullbacks. I think if a massive pullback happens, it's going to happen on pretty much every single indice. DAX, I mentioned it was pretty flat. Nikkei is looking bullish. Nikkei is looking pretty good here. Broke out of this massive level of resistance and continuing to go higher. So GDP, JPY, let's take a look. Oanda, let's see the EdgeFinder. Is it on the list? Is it on the list? No, so it's going to have a neutral reading. I mean, technical analysis would be bullish, although we are now sort of stuck at this major level of resistance right here. Not my favorite pair. Definitely not my favorite pair. I think CAD yen actually looks a bit better. If you want to take a look at JPY pairs, CAD yen, is it CAD yen? Let me see. On the EdgeFinder, yeah, CAD yen getting a bearish reading, kind of moving lower here, respecting the 20 EMA, kind of going a bit lower. So I think if you want to go yen, CAD yen may be a bit of a more interesting play. GJ right now, kind of corrective. JPY. So GJ fundamentals are neutral, as I mentioned, and it looks a bit corrected right here, and the problem is it's stuck at a major level of resistance. That's, I would say, the major issue, the main issue, stuck at a major level of resistance. Let me also check on the Euro CAD. I did have a trade on that one as a bit of a hedge. Okay, so took me out and going lower. That's okay, happens. Okay, let's see, CAD yen. Yeah, okay, CAD yen, as I mentioned, bearish. Maybe a good play to look for sell setups. Not on my watch list right now, so I'm not actively looking to sell CAD yen. I'm just pointing out CAD yen as being an interesting JPY pair. Okay, let's see. GJ, so we covered. Swiss yen. That's an interesting one. Swiss yen. Let's see. CHF JPY. Is it on the EdgeFinder? No, so it must be neutral. This is only filtered for the things that are not neutral. Swiss yen, it's flat in the short term. So definitely flat in the short term. Overall in an uptrend, in a huge uptrend actually. Yeah, this has just been crushing higher. Damn, this is a pretty nice chart. So maybe a bit of a pause. Maybe a bit of a pause here before the Swiss continues. We will see. Gold to silver ratio of silver lagging gold. I was looking at the gold to silver ratio and I couldn't really get a great confluence out of it. So I was looking at it. I just don't see a major opportunity. If you zoom out, kind of the equilibrium, the middle of the chart is right here. So we're now kind of at a level, at an area where gold is fairly priced against silver, you know. So at this point, it was pretty smart to buy silver. At these points, it may have been pretty smart to buy gold compared to silver, but we could go lower, so silver could gain more value relative to gold. It could happen. I'm just no longer using this chart as an extra confluence to get into silver right now. Okay, let's see. We're actually very close to the end of my segment. So let me run through the comments if we have one more interesting chart request. NASDAQ, I'm very confused about the NASDAQ. Well, I don't think you should be confused about the NASDAQ. Aussie yen. Okay, so let's do quickly. NASDAQ, you shouldn't be confused. It's just doing what NASDAQ does, exploding to the upside, massive value. Most money is going into tech companies. Artificial intelligence is a big thing. So this chart definitely makes sense why it's exploding. If we get rate cuts, it's going to be fuel on the fire, so it can explode even more. I'm just looking for pullbacks. That's for the NASDAQ. Aussie yen. Aussie yen, let's check the EdgeFinder. Aussie yen. I don't think it's anywhere here. AUD JPY. Yeah, it's getting a neutral reading. So that's neutral. It's looking flat in my opinion. So technical analysis, very flat in this area. I don't like the Aussie yen. I think CAD yen is a bit better if you want to sell. Aussie yen a bit flat right now. So that's about it for my segment of the stream. Thank you guys very much for watching. I will be here next week as well streaming. So make sure you come back, ask me some questions, and have a great rest of your week.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Okay, what's up, people? Welcome. Glad to be back on the stream. So as always, guys, we'll go through a bunch of markets today. I'll go through any pairs I'm trading, any pairs on the watch list, any pairs I'm interested in, and of course, we'll probably go through some others as well. If you do have any particular pairs you do want me to take a look at, any time frames, let me know. In any positions as well, feel free to share. But at the moment, I currently have 2 positions going on. Aussie yen, which I took last Thursday, so just gone a week in this position. Looking all right, to be fair. We've seen some nice momentum. It is quite corrective, and we are stuck at the upper end of this channel, so I do worry if price is going to potentially bleed and see some downside there. But in terms of the trade, it's what I expected. I'm looking to buy off the low of the channel well, hopefully with the expectation that we do break to the upside. But if price does potentially reject here, I have managed to trail my stops just above break even. So I will walk away with pretty much break even, but maybe a very small win. Didn't mean to do that. So in terms of the management, I think risk has definitely been reduced. I think depending on how the market is moving, I will hopefully look to trail as we progress, but we do need to break through that up end of the channel and really get going. At the moment, we're quite corrective, so it's a bit 50-50. We could see price take a downturn. Yen is not really weak. I've had a keen eye on what the yen is doing. Really flat. We do need to kind of get a move on if the yen pairs are going to start moving. And recently entered the trade in New Zealand CAD. Not really liking the way this one's moving. Again, I hopped into this trade at the lows here, expecting momentum to continue, expecting price to really see a continuation of that drop last week after the NZD news. Had a lovely breakout of support, nice retest, nice break of the counter trend line as well. Had some really impulsive candles, hopped into the back of that, stops above the level there, and looking for continuation. If price does break through resistance here, I probably will just close the trade early and take the small loss in the position, because a big part of me entering this market, entering this trade, was that momentum is likely to continue, and of course we're not quite seeing that yet. So if price is going to come back and retest resistance, I might as well just exit the trade, look to see what we do here. Things look good again, I'll rather re-enter with momentum back in my favor and with the likeliness that price is going to continue in my direction. And of course price may even want to break higher. There's a couple levels which I've been looking to short New Zealand CAD from this week, this being one and this supply zone being a second. So if this doesn't hold, I will have reattempts at that area as well. I'm pretty bearish on the pair. Reason being, looking at the higher time frames, I do think price has taken a very slow tumble to the downside, back into lows here, back into lows there, are kind of my target. So the fact that we did get a really nice break of structure, breakout of this support level, is what piqued my interest. But momentum looks to be very, very sluggish at the moment. We're not breaking through the lows as I anticipated. So yeah, I probably will exit the trade if I do see price starting to poke its head above resistance there, and just look for re-entries later on. But yeah, those are the 2 positions that I'm in. Haven't been particularly active, to be honest. A lot of markets have been sideways. DXY has just been horrendous, to be honest. Just back and forth, back and forth. I've been looking for opportunities for some buys in the dollar. I haven't really found them. And yeah, as of now, we're still kind of respecting highs, respecting lows. So in terms of USD pairs, I haven't really been active in the past couple of weeks. I've been waiting for some opportunities to buy dollar, especially on breakout of this kind of resistance area, but that didn't happen. And now we're pushing back into support. And of course, if USD is going to be bearish, I would like to see price break through those lows. And if that does happen, then yeah, I would expect USD to return to the lows there. So yeah, it's been pretty flat, and not looking to get involved in any USD pairs really. Again, I'm more of a swing trader, so I'm not so interested in the intraday moves of USD pairs. I'm not saying there's no opportunities, but from a swing bias, which is where my interest is, until we kind of make a decision which way we're going to go, up or down outside this range, I'm being very, very being very, very conservative with looking to trade any USD pairs at the moment. Hey, what's up, Ashley? Welcome to the stream. Good to see you. I took profit in Aussie yen. Okay, cool. Exactly, because of that range, we are still in August. True, September, yeah. We could do, yeah. Yeah, we'll take a look at gold as well, no problem. So yeah, I mean, it makes sense. Again, really corrective price action. Price could very much bounce and see a push to the downside. It's anyone's guess at this moment in time. I mean, the lack of momentum, you probably would favor a push down, actually, rather than price breaking to the upside. Probably need some yen or Aussie news to really get the ball rolling if we are going to break to the upside. But I'm happy with how I manage my position. So if it does come back down against me, I'll walk away with the break even, to be honest. But you know, closing the trade there, I think, makes perfect sense as well. I'm hoping for the bigger winner, but we'll see if we actually do get that move. As for gold, again, not really my favorite pair as of late. Probably for the past couple of months, really, gold's just been really flat, and I've been trying to stay far away from it. And yeah, until price kind of at least makes a move back to resistance, or at least makes a move back to support. And by resistance and support, I mean the top of the range or the bottom of the range, not just any level of resistance or support for that matter. Then I'll be interested. Or of course, price does make a breakout, then of course I'll be interested with that as well. We are at some resistance now, which we may see some downside from. I'm looking at the price action for silver. It looks pretty flat to me. Really corrective there on the way up. We're not really seeing much conviction. So perhaps we can see a bit of a move down, but I'd rather wait for price just to approach the high of the range rather than look to try and get some shorts here, because I know this is more of a significant area of resistance and probably provides a better probability in terms of actually catching a move down. So yeah, I'd rather wait for price to actually push to 34.30 before looking for opportunities for a short, and likewise opportunities for a buy. I'd wait for around 32.60. Of course, there's some support here which we may bounce from, but particularly I just like operating right at the high, right at the low of the range, because those are the best places, at least in my opinion, when you are looking to trade ranging markets, sideways markets. I don't want to get caught in the middle. But of course, gold long term is still very much in an uptrend. You know, we still are convincingly bullish, but we are in a phase of sideways. We are in a phase of consolidation right now, and it is pretty much 50-50 which way we do break out. You know, we could break to the downside, see maybe a bit of a top form, and we could speak about some pullback opportunities on the way down. Likewise, if you do break to the upside, well, the trend is bullish again, and we're looking to try and continue. Maybe that 4K, infamous 4K, is still very much on the cards. But until we do make that breakout, it's very much just looking to short highs and looking to buy lows with gold. I'm trying to stay away from the intraday fluctuations, to be honest, for now. So yeah, not much help on gold. Coffee, I haven't looked at coffee in ages. Take time to load. So yeah, I haven't actually looked at coffee in a while, and by a while, probably multiple years, to be honest. Anyway, okay, so coffee. Did you say sell? I mean, it's actually not a bad area for a sell, to be honest. I mean, really aggressive momentum, so I'd probably wait for price to start to show some more evidence of us selling off, maybe some structure breaking or more rejection, because this is still quite aggressive momentum. And let's not forget, price is in the overall uptrend, so I wouldn't be too surprised if we are actually just going to continue back to highs there. So I would be careful with that. But in terms of the location, I think it does make sense. Probably a trendline confluence coming to play here. We could potentially put another lower high in, and we could see it move to the downside. So logically speaking, I think we are in a smart place for a short, but because of how aggressive we are looking, I would be a bit patient there. I think shorting the highs here makes sense, but it is more of an aggressive trade. So if you were to short here, I'd be very watchful of that trade. And if price is not starting to push my favor pretty soonish, I'm seeing more rejection, more wicks, price starting to pick up momentum against me, I'll be very quickly out that trade, because after all, this is a really aggressive move. It might want to push a little bit higher. Whereas if, let's say, price formed equal highs here, let's say if price did break to the downside, break through support, well, the sells look a lot more convincing now. Perhaps some intraday pullbacks or even shorting once we break through the lows makes sense. And then, yeah, I think that could end up being another lower high and a push down maybe into some areas of support around here. I think that could be a significant target around 33,020. So, yeah, I would agree, coffee in an area for a short. But, yeah, I would say jumping in now, trying to call the tops a little bit, which, again, isn't necessarily such a bad idea. It's just more of an aggressive trade. So I would manage it aggressively. What is up, Trobius? Chat is quiet. Maybe taking a chill before the end of the week, I guess. Okay, we'll go through some more USD pairs because that is where a lot of the focus is. And again, we've had some USD news come out as well recently, which hasn't really caused too much movement. Of course, we're looking at a tad bullish right now, but I wouldn't say it's affected the market a lot. Truthfully, I'm just waiting for price to break the low or the high here. So as price fluctuates between the two levels, it's not really doing a lot for me. It's not really doing a lot for me in terms of, okay, I'm looking for an opportunity. Again, I trade more so in the 4-hour chart anyway. So, yeah, I'm looking for bigger swings that can hold for like a few days, potentially a few weeks if things go really well. And with the DXY, my main kind of outlook has been, okay, we're starting to print some bullish structure now. Is price going to form a higher low here? Are we getting ready for perhaps another swing back to the highs? We could be. Well, if that's the case, then let's break out this consolidation to the upside. Then that will give our green light to say, okay, things are bullish. We're probably going to continue higher. We probably are going to come back to highs. And of course, looking at Euro USD, you'd be looking at something, of course, in the exact opposite direction. You got your lower highs there. You can kind of connect them with a trend line, 1, 2, potentially 3. Of course, this is your range for Euro, pretty much mimicking what the DXY is doing. If this is going to be a lower high in comparison to these two previous highs, then I would want to see Euro break the floor here. And if we can get that breakout, that's of course going to tell us that, okay, most likely we're probably going to continue lower and targets will be back at the swing low. So I can see a world where Euro does break lower, DXY does push higher in trying to continue this structure here. Of course, we're nowhere near that at the moment. We're very much in the middle of the range, and for all we know, we could very much break to the upside, and dollar can very much break to the downside. But whilst we're in here, I'm not really interested with price action, which was what I was telling my my subscribers on the stream I was on earlier. Whilst we're in here, unless you're looking to try and buy the lows and sell the highs, I would stay away from Euro and wait for us to eventually get that breakout. I wouldn't say pound USD is any better as well. This looks really flat to me as well. We've got a really significant level of resistance running through the market here. Significant support, sorry. We've got significant resistance above us here. And again, until price makes a move above the highs or below these lows, I'm pretty neutral there with pound as well. We've got swing highs up there, swing lows up there. Depending which way we break, we'll decide which target I'm looking at. Of course, if you do break to the downside, I'm very much looking at a move like this. If you break to the upside, I'm very much looking at a move like that. In here, it's tricky to understand what price is actually doing. It looks like it's fluctuating because despite the fact we're seeing strength in these candles, despite the fact we're seeing really aggressive, bullish, engulfing candles, we're not seeing any conviction. Again, here you can see another big, strong, bullish, engulfing candle. Price is now stalling, throwing some wicks to the upside. So momentum is a little bit deceiving here. Typically, when you see those big candles driving price higher, you like to see price continue because it's kind of like, okay, the bigger players in the market buying up or selling a particular market. And now we're seeing that kind of momentum kick in. Despite the fact we're seeing strength here, we're not really seeing signs of continuation. And that's because we are quite flat for pound. Of course, dollar's flat as well. So there's a lot of indecision right now is the key point. So which is why I think waiting for something like this or waiting for something like this will provide a lot of clarity in terms of direction for the dollar pairs. And at the moment, don't really have that at the moment. So I'm pretty, not neutral, but I'm just sitting on my hands waiting patiently for USD to develop. And JPY hasn't been any better as well. If I have a quick look at the basket for the yen, which is what I kind of use in similar fashion to the DXY for the dollar, this has been very, very flat as well. In fact, if I go to the daily chart, it kind of summarizes price a little bit better. Very, very flat over the past kind of month or so. Yeah, since kind kind of early July, so a bit more than a month. We haven't really gone anywhere. So JPY a bit flat here. Will JPY break higher? Possibly. Break lower? Possibly. I think we only know those questions when price actually makes the move, and then that will pick the direction for the yen, maybe for the next few days, maybe a couple of weeks, and the yen pairs will start to look a little bit better. But a lot of the yen pairs are very, very flat. Looking at GJ, don't know what this one's doing. Horrendous price action. As of late, this looks like another range to me. You could probably argue that kind of ranging over here a little bit as well. So yeah, I wouldn't be getting too excited to trade GJ and some other yen pairs. Of course, I am in Aussie yen, but that had a nice channel to trade. GJ not as quite. Apple just tapped yesterday's high. Okay, we can take a look at Apple. Ethereum, yep, we can take a look at Ethereum as well. I just did Gold Patel. If you scroll back a little bit, you'll be able to see the analysis to that. But Apple, I think, let me look at it different. Okay, no, not that one. I think with Apple, I think in terms of momentum, I can see us really starting to pick up soon, and a few other stocks of a similar light as well. I think we could be on our way back to highs. I like the price action a lot, especially the way we broke out that range. I can see us swinging back to the highs. Of course, that probably not happen overnight. It's probably going to take some time, but I can see us working our way there in terms of that. We're already in full motion, and we might do something like that in the next few days, few weeks. But as of recent, we are intraday bullish. Yes, I suppose looking a little bit corrective now. I suppose that if you're very intraday, you might be taking advantage of some very small buy opportunities within that. But I'll start to kind of be a bit careful as we do approach some resistance supply areas there on the left. But yeah, I would be expecting us to reach the highs over there, which were last week or the week before? Yeah, a couple of weeks ago, around 33.8. Expecting us to nestle back at those highs soon. But yeah, altogether, price action looking really, really bullish to me. Ethereum, that one had a bit of a reaction as well. Past couple of days, I'm pretty sure we've seen a move to the upside. Price was pretty bearish, and we came back into that supply zone and had a nice bounce there. These are some opportunities which I was discussing earlier. I think last week, maybe 25th of August. No, that was this week. That was Monday. So yeah, I was discussing a couple of areas where buys can make some sense. I discussed this level here in case we have kind of a shorter pullback. We did see a slight reaction, but you can see it didn't really provide much support there. Then I was talking about this demand zone, really nice consolidation. Of course, this is the reaction we had on Friday, really aggressive drive to the upside, and which actually did provide some nice buying opportunities there. Of course, we can see that in hindsight, but again, trading's all about just picking smart areas to buy and sell from, and managing the trade afterwards. And that first level didn't provide too much support, but secondly, that level did. Now, do I expect Ethereum just to run back to highs? Let me delete the chart. Do I expect price to run back to highs? Probably. I mean, yes, but I wouldn't be so convinced with it, because we did respect highs really aggressively here. I'm not a fan of this wick from a bullish perspective. We had a lot of momentum here, and it looks like we tried to continue, but just fell flat on our faces. And now we're looking not bearish, but I can see a world where Ethereum starts to do something like this and consolidate a little bit, and things do get a little bit dry. And let's not forget, Ethereum also is at all-time highs. I think we just managed to spike through them, actually. Map out the previous wick there and take that across. Yeah, we just about spiked through. So Ethereum overall, of course, a very bullish market. We broke through some significant resistance early this year, or recently, actually. We had a nice break and retest of that level. Price continued creating new all-time highs. So as a whole, Ethereum is definitely on the up. But I can see we're getting some more selling pressure coming to the market. We're rejecting highs aggressively. We might become a bit corrective, and this could insinuate maybe a bigger pullback, maybe a consolidation, maybe some type of counter trend could form. So if you're kind of intraday for Ethereum, I would still stay bullish because I'm still seeing higher highs and higher lows. I'm not seeing any evidence of structure breaking. Yes, I would be careful seeing such aggressive selling pressure there. But let's say if price was to come back into this level again, I would still say buys look good. Perhaps a nice double bottom could form. I would be quite watchful of that trade as we kind of approach resistance again. I would probably look into locking gains, being a bit cautious. If I see some red flags there, potentially close the trade a bit early. Then if things go well, maybe I do get a trade back to the highs and then probably look to close trades there. We can trail stops however you want to manage it. But I think this is still a sensible place for a buy. For the most part, we're still seeing higher highs and higher lows. So for now, I would stay bullish, but I'll be careful. Okay, we can take a look at NASDAQ, no problem. Took a small short. Which one was that? Is that gold or Ethereum or Apple? Looked at a few pairs. No problem, happy to help. We'll take a look at NASDAQ. So last time I had a look at NAS was a few hours ago. We're looking pretty bullish. Okay, no, the news has pulled us right back down, or at least given us a spike and then pulled us down. So with NAS, yeah, we've come into an awkward area. If you look to the left here, you can see lovely consolidation, strong drop to the downside. That's clearly an area where we've seen sellers enter the market in the past, and perhaps we're seeing that return. Of course, as a whole, NASDAQ still very bullish to me. I'm looking at the higher time frames. Direction is still very much up. No structures being broken. Haven't threatened any lows really. We saw a little bit of selling pressure here, but that kind of stalled. We formed some wicks here, saw a strong close. So I still quite like the NAS back to highs. It's a market which trends higher most of the time, and you don't really want to go against that until kind of really you got real strong ground to stand on. If the market is in a bearish phase and we're seeing lower lows and low highs, of course shorts make sense there, but at the moment that's not the case. So I'll try and only focus on the buys and not really to get carried away with any selling opportunities, especially as a swing trader as well. But what I would say is that we're kind of looking very flat right now. We're kind of consolidating, and this looks like we've kind of tried to break to the upside, but seems to look like we're failing. Now this 4-hour candle still does have 3 hours left before it closes. So although we're pulling back and leaving a pretty big wick to the upside, perhaps in 3 hours we do push up and actually it closes bullish. So that could happen as well. But for now, it looks like NAS is having trouble breaking highs. Perhaps we could see another push to lows. So if I was going to look to trade NAS, especially from a bullish outlook, I'll wait for us to see if we can break to the upside convincingly. And that will be my green light to either buy breakouts or look for some type of pullbacks, break and retest. We had some lovely break and retests in the last bullish leg. We had a high over there, pullback, break structure, lovely retest. Same over here as well. High over there, pullback, break structure, retest, nice continuation afterwards. Perhaps we could see something similar develop here, which could take us back to highs as well. So still very bullish for the NASDAQ, still looking at higher lows, anticipating this to be another one. We are quite flat right now. Looks like we're struggling to break highs. Perhaps we might see a bit of a sell-off here, especially with that rejection. But if we can see a convincing push higher, then we're back on, and we're looking for pullbacks, retest, and we're back to highs, and we'll go from there. But we might be having a bit of trouble, this afternoon with the news. S&P likewise as well, but S&P is just at an awkward place for a buy anyway, because these are the all-time highs. So yeah, I wouldn't want to be buying the S&P anyway. It's either price smashes through the highs and we can look for the next pullback afterwards, or you respect the highs and we look for some buys slightly deeper down, maybe more so towards these areas here. So S&P is an awkward situation. NAS, I would say, is very flat. NAS is very flat, consolidating. Let's wait for evidence of momentum to step back into the market, maybe in a similar fashion to what we saw here, then look for pullbacks or even buys in the breakout. And if I look at the Dow Jones quickly, this one, yeah, failing at highs. Not the best, but again, if I look at the daily chart, We've just broken through such a significant level of resistance. Things are very, very bullish right now with US30. Convincing candle on Friday. Looks like we had a lovely pullback, a retest, and prices tried to continue off the back of that. It's just failed at highs at the moment. So if we were to push down, let's say if we do reject highs well and we do push down, I would suggest if we can push back into lows here, the buys come back into play, looking for a bit of a double bottom, and then perhaps we do continue. I'll still stay bullish with US30 as long as price stays above resistance there, of course, now support. As long as we stay above this level, I would remain bullish. If we close back below, especially aggressively, this will turn into a massive fake out. This becomes resistance again, and we could see price actually sell off from that. So I would be quite watchful of that there for US30. But for now, above support, as long as we can stay above it, I think if we do come back down, that provides another opportunity to buy US30 again. Of course, with valid entry confirmations, and yeah, hopefully you can see a nice continuation. Oh, on Apple. Yeah, okay, if you're looking for a scalp, that's different because, again, I was speaking on Apple more of like a swing trade bias, and you're looking for the longer term move. A scalp, that's a whole different kettle of fish. You're in it, for a short period of time. You could very much take a quick sell here and there and then run. But yeah, I mean, with a scalp, you just got to manage it like a scalp. You're not there for a long time. You're there for a good time, not a long time. You're in and out the trade pretty quickly. But from a more of a macro point of view, high time frames, momentum, swing, I'd only be looking to buy Apple for now. Looking pretty bullish with the way you broke out there. So yeah, as of now, my interests in terms of pairs I'm looking to trade, of course, I spoke about Aussie Yen and New Zealand CAD. Those are two pairs I'm in at the moment. Any other pairs I'm looking to get in? Off the top of my head, no, not really. There's a few question marks. Yen pairs still really flat. USD pairs really flat. That could change in an instant, really. Like I said, they're kind of indecisive right now. Don't really know what they're doing. Again, not every time I jump in the market, I know exactly what I'm expecting the market to do. Sometimes I have no idea. I'm just waiting for more information. I do have a clear plan for many USD pairs, like for pound we went through, like for euro dollar. If price does break to the upside, I'm very bullish, looking for pullbacks and expecting a lot more upside. Likewise, if you do break support, I'm very bearish, looking for pullbacks and a lot more downside. So I have clear plans from that outlook, but as of right now, price action, I'm not prepared to be looking to buy or sell where price is right now. There's no real significance to me. And same thing for like pound, and same thing for a lot of other USD pairs. So until I see some breakouts on the DXY, until I see some sustained momentum, I'm just going to play it cautious, manage the positions I'm in. And then again, all it takes is a day or two and things are looking very different in the market. But at the moment, really, really flat for me. But anyway, guys, we have reached the end of my segment. I do really appreciate you guys having me on the stream. I do have a good time here, so I do really appreciate that. I'm sure anyone in the team will leave a link to my channel if you want to check me out. It's just my name, Miko Audu. You can check me out. I do stream there and provide analysis and other content as well. So check it out if you are interested. But yeah, thank you guys for having me on. Have a great rest of your week, great weekend, and I'll catch you all in the next stream next week.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.